And we start off with that roller coaster day on Wall Street. Markets opening the day with another big loss as the Trump administration doubled down over the weekend on their tariff plans. Reports the White House was considering a pause, though, sending stocks rallying into late morning with the S&P climbing as much as 3.4%. But it gave up those gains when officials called those rumors fake news, seesawing the rest of the session to end the day basically flat. The other major indices saw similar swings, with the tech-heavy Nasdaq whipsawing nearly 10% from low to high. The Dow's 2,600-point range today was its biggest on record. Meanwhile, yields on the 10-year Treasury spiking sharply higher, climbing back over the 4% mark, seeing their biggest basis point jump in almost 3 years. And the VIX, the volatility index, briefly topping 60 for the first time since last August. Does the bounce off today's low suggest we've made a bottom, or is there more pain to come? Are we closer to a bottom, maybe forming a bottom? Guy, what do you think?
Well, Carter will talk about the trend line. I'll talk about that prior high back in December of 2021, January of 2022, 4,800 and change, where we traded down to was a test of that prior all-time high. So that is a good sign. Obviously, the VIX cascading higher is maybe a good sign. Maybe we'll get some sort of capitulation. And I think, yeah, short-term bottom is absolutely feasible. I don't think all the damage is done yet, but you got something to trade against. The valuation concerns that we had have been abated a little bit, but if you look at like a CAPE ratio, it's still probably twice the norm. The Buffett indicator, although off its highs, is still high. So valuation-wise, there's still some room to the downside.
Yeah, and to the downside, I mean, it is that level this morning, 48.35 or something like that. That was the all-time high going back in 2021 before the market topped out. This takes me back a little bit to Q4 2018. The stock market sold off 20% from really in Q4, from the start to the end. And, to change that tide there, the Fed really did have to pivot. They were raising interest rates. The Fed funds got to about 2.5% or so, and then they went really easy, and the stock market rallied pretty hard. I think we closed up more than 20-some% or so in 2019. It's just not that easy of a fix right here, right? And so if you think about, there were growth scares back there, there's a couple other things going on, but if you're telling me that the White House is going to keep doubling down on this sort of stuff, the sort of damage done to this economy and the global economy is really going to be hard to turn around, and the market's going to sniff that out a little bit. So again, not a good press here, especially when you consider how negative everybody is and the lack of good news right here, because I keep hearing this, and I can't imagine this happens. The scenario in which we are back towards those prior highs at 6,100 in the S&P 500, I can't envision it right now. I can't envision it for 2025.
Well, that's why I don't think you have to rush into anything here. I mean, I think as we're all talking about, there's some important levels. The market is absolutely respecting them. I mean, if you think about the level Dan's talking about in the middle of the night, those of us that were awake, I mean, it was really, it was almost within 2% of the 200 week moving average, which is, again, a really important level to have respected and held. And then you have an intraday rally all the way up to almost 9.5%. It tells you what was going on, to at least to those intraday highs. What's constructive for the market, and this is what we're all saying, after this kind of a move in the oversold nature of the market, it's really tough to press lower in the short term. And in fact, I actually think I'm kind of happy that markets didn't really finish in the green. I think in terms of establishing even a legitimate trading bottom, I think the dynamic around where you want to see certain things, and as we say all the time, markets stop panicking when policymakers start panicking, and the White House isn't panicking. The Trump administration is saying this is what we're doing. They're not moving off of what they said, and in fact, they've had to reaffirm throughout the day wherever the news flow starts that there's a 90-day reprieve coming, which was very clearly refuted. It's interesting for price action that actually the markets didn't lose it on that. In other words, you've got China retaliation. You got, no, we're not thinking about 90 days. So, all in all, today was a better day than I thought we could have had at, 4,800 in the middle of the night. But I think it's very hard to believe that based upon the policy, the reason why people are so freaked out is it appears as if there's a structural shift in the approach to the economy. I don't think this is very different than what the Trump administration said they were going to do. But I do think restructuring the U.S. economy, to me, is something that market participants are having trouble with, and that's where you've gotten a lot of this vol.